How you doing, everyone? This is easydividends.com. Previously, you've seen a lot of my videos, and they were just a lot of spreadsheets and graphs. So today, I'd like to just introduce myself and make it a little more personal. So I've been a dividend growth investor since 2012, and I've been managing my portfolio with an emphasis on dividend growth and income growth. So I used to invest in just mutual funds basically, and after that I decided I wanted to just become a do-it-your-own investor, do-it-yourself investor. And so after that I just started buying individual securities with an emphasis on income growth. And so now I earn about $2,000 a month with my portfolio in total. So I'd like to just kind of share with you these tips and tools about income investing and my opinions on certain sectors and securities and things like that. So today, what do you want to talk about today? So today, what I wanted to do was just explain to you why you don't want to buy commodity oil stocks. So the reason why we have commodity stocks are basically related to the underlying commodity. And so the reason why I want to tell you why you don't want to buy commodity stocks is basically it is very unstable. Your stock really depends on the underlying commodity, which is oil. So this will lead to erratic dividend growth and also an erratic price chart. And I'm going to show you this in the Excel spreadsheet later on in the video. And I'll show you why you don't want to have these types of stocks in your portfolio.
Okay, so let's get a definition of what are cyclical stocks here. Let's type in Google, what are cyclical stocks? So we want a broad definition of what cyclical stocks are. Cyclical stocks are stocks that are affected by macroeconomic or systematic changes in the overall economy. Most cyclical stocks involve companies that sell consumer discretionary items. Okay, so these are basically when the economy is good, consumers will spend more. When the economy is bad, consumers will cut back on. So these are basically cyclical stocks. It's a pretty broad sector. So let's kind of cut this up into a couple of sectors if we can. Right, so let's take a look here. What are cyclical sectors? All right, so cyclical sectors. We want to see the four main sectors: basic materials, consumer cyclical, financial services, and real estate. We want to talk about basic materials, okay? We want to talk about commodities, okay? Commodities, and we want to break that down into oil. So I mainly want to talk about oil stocks because I own 3 oil stocks in my portfolio, and I want to show you why you shouldn't own them, and I'm trying to get rid of them myself. The first, okay, so cyclical sector. So we want to go to consumer cyclical. So let's do another check here. Are oil stocks, okay, right here, are oil stocks cyclical? So let's okay, and of course they are. We know that, and this is what we're looking for here. All right, all commodity stocks, oil stocks fall into commodity stocks, and these are basically energy stocks. So they are cyclical, obviously, and commodity stocks are very cyclical. So because they depend on the underlying price of the commodity, which right now we're talking about is oil. So let's go into the spreadsheet, the Excel spreadsheet, and I have 4 different stocks in my portfolio, which I want to show you, and you shouldn't buy them. Okay, the first one is BP. Okay, the second one is Suncor Energy, and the third is Exxon Mobil. So I'll just show you 3 actually. These 3 sit in my portfolio, and I'll explain to you why you shouldn't have them. Okay, so we're at the spreadsheet right now, and this was the previous spreadsheet I was using on the previous video. So I added 3 oil cyclicals that are in my portfolio, and let's look at dividend growth. Okay, so this is basically what we have from the previous video: low yield, mid yield, high yield, and I added oil cyclicals. These 3 oils are also in my accounts: SU, Suncor Energy, XOM, Exxon, and BP. All right, so let's look at the dividend growth for these three securities. So you'll notice the first one, Suncor Energy, SU. Okay, it should be actually SU.TO. So I've calculated the dividend growth for this, and it was looking fine all the way up to 2020, where it cut its dividend by 34%, and also price-wise, it has dropped tremendously, and we're going to go into that in a second. Okay, so the thing is, you look at this dividend growth, you look, oh, this is very good dividend growth, up to 2020, well, 265%, or if I didn't include 2020, but you'll notice it's quite erratic. It, from let's say 2015 to 2016, it only, grew 1.75%. Sometimes it goes up 46%, like from 2012 to 2013. So it is not very stable. It's very erratic, and you'll notice the price growth is also very erratic. XOM, okay, it's got a more consistent dividend growth track history for now, but you're going to notice that in the price chart, which I'll show you in a second, is very erratic, especially this year. It's basically dropped like a rock, and this is not what you want when you are holding stocks for the long term and you want, steady dividend growth. It has shown like good dividend growth, but it is slowing. So you'll notice from let's say 2015 till now, it is kind of slowing. Well, it did really slow a lot this year, and there might even be a dividend cut this year, 2021. Who knows? BP is the worst of all the cyclicals that I own. Well, these three that I own. And I don't even know why I own BP. I shouldn't have owned it in the first place. And you'll notice this is really bad, the dividend growth. Negative 37, negative 20, 17, added 17, 10, 0 for a couple of years, 0.2, 1.25, and this year, last year, 2020, just cut its dividend by minus 23%, by 23%. And overall dividend growth is minus 43. And I am waiting to cut BP off my portfolio whenever I can. Okay, so let's go to the graphs and take a look at SU, Suncor Energy, Exxon, and BP. So we're at the Yahoo website now. You'll notice here Suncor Energy, very unstable price growth. There's a huge peak at 2008, over 10 years ago, and there's odd spikes that come up and then come down. It's not a very stable price growth graph, as you'll notice, and up to beginning of 2020 is trading at the early the 40s, the early 40s, the 40 upper 41 range, and then it just dropped, and now it's at the 20 some range, trading at the $20 some range. So it's a very unstable price growth, and you'll notice as before when we talked about the dividend growth, it just cut its dividend a lot in 2020. Okay, so the next one, and you'll notice that as a dividend growth investor, you don't want to have stocks like this because it's extremely unstable, both price-wise and dividend-wise. So the next one is XOM. We did see XOM as being a more of a consistent grower for the last 11 years that I've on the Excel chart we saw. But however, again, price growth is very unstable. It was trading on the hundreds in 2014, and now it's dropped to less than half that. And this is not what you want to see. If you invested like in 2007, you'd still be underwater at 50%. And this is not what we want to have in a dividend growth portfolio, especially when you see no price growth whatsoever. And again, the dividends are not probably, they may be cut, who knows, they may not be, but it really depends on the underlying, how the business is going to be run this year, and the commodity prices, and its beta, it's very high, 1.34. And again, so you'll notice the price growth here is extremely erratic, extremely unstable, and especially you'll notice, especially this year, from last year, 2020, that huge drop, and it hasn't really recovered at all yet from the higher growth of 70s. Okay, and the last one is BP, which is obviously it's probably the worst. It is the worst dividend grower, and price-wise, it's not going to look any better, the price chart. So let's look at BP. All right, so BP we see here. Okay, again, horrible price chart. It's just it's just all over the place. 1999, 59, it drops to 38. It's back up to 60s and the 70s and '07. It drop up, down, and this is what you'll see the nature of commodity stocks, especially oil stocks. 45 in 2018. Now it's trading on $24. So it's a very unstable price chart, as you'll see as well. So this is what we're talking about here. When you invest in, when you're as a dividend grower, you don't want to invest in these kind of erratic oil commodity stocks, and it's just not a good idea. You may, if you're a trader, you may want to catch, right now we're at the bottom of the oil cycle, and you may want to catch this as a frequent trader, but as a long-term investor, you don't want these in your core holdings.
Okay, folks, so that's about it. So this is what I want to tell you. This video, basically just my opinions on oil commodity stocks specifically. And of course, if you like this video, please subscribe, and I'll make more videos for in the future. Okay, until now, thank you, and bye bye.